Do you like Grant Cardone? Me neither. Alright, I'm just kidding. I don't dislike Grant Cardone, but I do dislike his tax tips, at least the videos that he posts online with his tax tips. And the reason for that is not that he's necessarily completely wrong. Sometimes he is right. He has a short enough video, but generally speaking, he's about half right. And then the second half of his videos, he just kind of goes completely off the rails. My name's Nick. I'm a CPA, and I debunk bogus tax tip videos that you see across the internet. Or sometimes I will verify that they're correct, but it's just a much rarer occurrence. So let's go ahead and take a look at one of his tax tip videos and see where his imagination takes, his understanding of the tax code takes us.
My daughter Sabrina should be a millionaire when she's 20 years old. She's an employee of the company.
Actually, so far, I do like the direction of this video because hiring your kids in your business is a good tax strategy. It's a way for you to be able to shift income from your high tax bracket to their low or no tax bracket, as long as you have work for them to do in your business. So far, I do like this idea.
She's required to do certain things, like stand up and say hello to everybody.
It is clearly a joke. She's not just being hired to stand up and say hello. They laughed about it. It is pretty funny. That said, they've obviously talked with their accountants about what duties and responsibilities she can be doing to earn the wage they found is fair and reasonable.
She's paid one time a year, the 30 grand.
Okay, 30 grand is a little high. Now that said, it's not completely unjustifiable as long as he has the work for her to do to justify that wage. She did look a little young, but let's say he's able to justify that. I don't agree with the idea of paying your child one lump sum per year because you don't do that with any employee, generally speaking, right? You're going to pay them throughout the year. Their salary, if it's $30,000, it's $2,500 a month. Just pay your $2,500 a month.
The 30 grand then goes into Cardone Capital. Cardone Capital is a fund open for accredited and non-accredited investors. It goes by institutional quality real estate.
So he is directing the money for her, but I guess you could just make the case that he is her parent, helping her invest it wisely because she otherwise wouldn't really know what to do with the $30,000. It's fine. I wouldn't necessarily air all of your strategy online because it does make it look less and less like this is her earning the money and less like this is her money to have earned. Then she can't really do anything with it. That said, we're just going to breeze past that. Fine, he's helping her invest it and make smart moves with her money.
That real estate pays her a check every month. She gets $667 a month. She can spend the $67, she can never touch the capital.
So what I'm getting from this is $667 comes to her, $600 of which is a return of principal, and $67 of which is some kind of investment or passive income, whether that be interest, dividend, real estate, something like that. It is passive income that she's earning, $67 a month, $600 is return of principal. It's not the wisest thing to do because if your dependent child has too much passive income, they're going to be subject to kiddie tax, which means that they're going to be taxed at the parent's tax rate. So you do want to avoid having your child earn too much passive income.
Every year I add to the capital, I get to write her salary off.
Correct. He does get to write her salary off.
Her income is not taxed because it's passive.
Wrong. In two ways. Well, the first way is that $30,000 you wrote off is income to her. So she has taxable income already right there. Second, passive income, the $67 per month, is definitely taxable. And again, if she reaches over $2,500 of passive income in the year, it's going to be taxed at his tax rate, which means there's no advantage to having done that. So, definitely taxable to her in two different ways, the passive income and the earned income. The only thing that's not taxable to her is the return of capital, the $600. But that's not taxable for any person because it's not passive income. It's a return of principal or a return of capital.
The appreciation in the property will take care of her in the future, and I never have to pay for any of her.
Sure, this investment will help her in the future, and the money that she's receiving each month will help her be able to pay for the things that she wants. That's totally fine. So there we go. We have a Grant Cardone tax strategy, again, that is about half good, paying your kid in your business, with about half not that great, paying him one time during the year, having her receive passive income, which is definitely taxable, and if we receive over $2,500 of that during the year, it's going to be taxed at the parent's tax rate, which completely eliminates the whole purpose of shifting income down to their lower tax rate, because now it's at your tax rate. But that said, there is a good tax strategy here, and let me explain the best way to execute this. If you have kids, find a way that you can hire them in your business. Put them on W-2 and shift income from being taxed at your high tax bracket to their low tax bracket. Keep in mind, though, you need to pay them a fair and reasonable wage based on the position and work you've hired them to do. You should not base their wage on the standard deduction, the Roth IRA contribution limits, what they're going to spend the money on, like their daycare or something like that. None of those things matter. Because just like when you hire any other employee for your business, you don't care what they're going to spend the money on after you pay them. All you care about is what does the market pay for the position I'm hiring for and the duties that I'm going to have them do on a daily, weekly, monthly basis. That's how you should hire your child as well. You hire them as an employee. And the best possible thing that you can do to save the most on taxes is pay them out of an unincorporated entity owned solely by the parent or parents of the child, meaning you pay them out of a sole proprietorship, a single member LLC, or a multi-member LLC owned only by the parents of that child who is a minor, 17 years or younger, because you won't have to pay either side of FICA taxes, which means you will save a lot on taxes paying them that way. But as with everything, make sure there's actual business purpose and make sure you're hiring them with the correct intentions and the correct proof of why you're actually hiring them. Don't hire them to stand up and say hello to people. Don't pay them one time during the year. And don't pay them based on any other factors beyond what you can justify paying them for. That is the best tax strategy you can actually implement in your business. And if you have other intentions with where the money should go afterwards, that is a conversation to have with your child and your accountant behind closed doors rather than online. Just a bit of advice for how you should go about your tax strategies. Thanks so much for watching. Be sure to like, subscribe, comment, and hit that notification bell. If you have any questions, definitely be sure to let me know. And follow me on TikTok and Instagram if you're on those platforms as well, where I will respond to things in more short form and also answer questions that may not be answered here. Thanks again for watching, and I'll see you in the next video.